This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. You are listening to Daily Market Wisdom with Nick Santiago, and it's May 1st, 2020. This is show number 25. Well, Nick, as promised, excitement in the market today. We saw Amazon's earnings released and all hell broke loose.
Yeah, I mean, I think we've talked about it before that they were going to report this week and that the stock had run up a tremendous amount. It went to a new all-time high. And, you know, even if you take a look at a daily chart yesterday, I mean, the stock went to a new all-time high above the 2450 level. It actually traded as high as 2475. Today, the stock's getting absolutely hammered, trading down about 7%. But when you have a run-up like that, it's going to be a sell the news event. So buy the rumor, sell the news. Stock had a tremendous run, and I think it's just some profit taking after a big move like that. But Amazon should be on everybody's radar in the next month or two. Let it consolidate, let it pull back, and then, you know, take a look at it again. But, you know, the stock, people don't realize it, but, you know, it was trading on March 16th. The stock traded as low as $1,626. And it went all the way to $2,475 yesterday. So, you know, to see it trade back down to $2,300 today, that's not unusual. It's just typical buy the rumor, sell the news type of an event. I really don't know what they said or what the conference call was, but I don't even care. I just know that I told all my members, if you are long Amazon with anything, be out by yesterday. And sure enough, that paid off.
Yeah. Yeah, well, I guess there was a kind of predictability to it. The tree doesn't grow to the sky. It's up 50% in a month, and it was bound to take a fall.
Well said. And that's the way things are. When they make that Statue of Liberty type or Empire State Building type pattern where they go parabolic, you gotta be really concerned when you see that pattern, especially into an earnings announcement.
Yeah. So earnings, and that would be, you know, intuitively you would think good earnings, great earnings are going to result in the stock going up, but not to be, was it?
No, that's not the way the stock market works. The stock market wants to fool most of the people most of the time. So, you know, after yesterday was a typical Pinocchio is what we call it in the business. So let me explain it real quick, if I may. On the 16th of April, the stock made a high around $2,346. And yesterday it made a new closing high at $2,475. So amateurs think that's a breakout, but it's not. It's a fake out. And what you're going to see here is that the stock today gapped lower and really hasn't really recovered all that much from the lows of the day. Right now it's trading around $2,200 and $2,300 a share right now.
Yeah, so it pulled back from really going, and yeah, I can understand. I've been in that position before. Think, oh, it's making a new high. It's going to continue to make more new highs. You see that with the stock market at times, where it's actually peaking, but it's making new highs, and most investors don't understand the significance.
No, they don't understand. You always have to be a contrarian in this business. It's just the way the business is structured. And again, it's human psychology. So, you know, the more you study charts, the more you learn about these patterns, but they seem to repeat, you know, time and time again. There's other times where, you know, hey, maybe the stock will go higher, but this one, I mean, when you have a move from under 1650 to 2475 and you got an earnings announcement and it's what we call a Pinocchio, meaning a new high above the recent old high going into the announcement, it's almost always a sell the news event.
Interesting. And Pinocchio, his nose grew longer the more he lied. And I guess that's the analogy there, is that the stock market is the price, the market's lying and people are buying.
That's kind of how it works. But, just think about it. A lot of people jumped on board Amazon yesterday. The volume was high. The stock made a new closing high. I mean, everybody was just, getting all excited about the earnings release. And then today they pulled the rug right out from under them. And that's typical. It happens all the time.
Yep. It's not the first rodeo here. On the other hand, we have Apple, which actually posted some okay earnings considering what happened in the past quarter.
I was just going to say, Apple had a tremendous rally also into the earnings announcement. The stock is back to where it was, going back to early March. I mean, so Apple's had a great move. But what happened with Apple is it got very close to that psychological 300 level today. I believe it got above there yesterday in the after hours. That was a number I warned all of our traders about. I said Apple won't exceed 300 by much. If it does, it would be about 301 or so. And this is another pullback candidate. And today, to be honest, Apple's only down 1%, a little over 1%. So it's not a horrible showing today. It is down $3.76. But it's going to need some work to get above that psychological 300 level.
Yeah. And maybe that's going to require the economy to reopen, perhaps?
It could. I mean, it really, I couldn't tell you if it will or it won't. What I can tell you, though, is when the chart pattern tells us that Apple's going higher, I could let everybody know. Right now, the chart pattern says it's not.
Yeah. So, yeah, trust the charts. That's what it comes down to.
I just go off the charts, Kerry. There's, I'm not, I guess maybe I could say I'm not smart enough to figure out all that other stuff. But one thing I do know is the charts.
Yeah. So the chart doesn't lie. And then we look at gold and silver. They took a hit yesterday, pretty substantial. And I think gold was down $30, close to $30 the ounce. Silver was down not as much. And today it's a different story.
Yeah, today we have gold futures up 16.5 right now. It's about 1%, trading back above the 1700 level at 1710. So really, really good action for gold. I actually love what gold is doing right now. I've been telling you that I want to see it consolidate, pull back. I don't want to see it make new highs right now. If you just take a look at a weekly chart, I mean, this thing is setting up like the mother of all breakouts. So again, it needs more time. It's not ready yet, but it is really, really pretty to watch it unfold and develop. So we're going to keep an eye on gold. I own silver, as you know, via the SLV. So I think that's another way of playing it. Silver has a lot of catch up to do to gold. And I'll be keeping an eye on gold miners too, because they've been pulling back, but they don't go down. They're like weeble wobbles. They just, they pull back, they go right back up. And again, the pattern right there is another consolidation pattern in the making. It needs more time, but the trend is up, and this is not a trend you want to fight.
Yeah, so the trend in this case is your friend.
Trend in this case is your friend. Exactly.
And so trading wise, you're still sticking to silver. October calls. October, I think there were 17 calls, and that's still looking good.
Yeah, I have right now. I own the call options and I own SLV outright as well. So I'm sticking with both of them. I love the SLV pattern. I love what it's doing on the charts. This is exactly what you look for upside. I mean, the stock put a little pivot high in around the 14th of April. Now it's just going sideways in a slight down slope, and it's consolidating below its 50-day moving average on SLV. And that should take me up to around the $16 level. So I think that is setting up pretty much picture perfect. And I do own call options in it as well with the October 16th expiration, and that's a $16 strike price.
Right. Gotcha. $16. Okay. And finally, oil, it still looks like it's still a losing trade, but it has been moving up.
It's been moving up, quite a bit. I mean, crude oil now is just a hair below $20 a barrel in the June contract. So, up another 5% today, and it's had quite a pop as of late. So we're going to keep it on the radar, and we'll watch it. I mean, I think if it does really significantly make a move higher, you're probably 30-35 is your max upside on this, but that's still a long way from here. So I would just tell traders, if this economy starts to open up, and it looks like we're starting to get a lot of places opening up now. And we'll see how that goes. But if all unfolds, you're going to start to see people using crude again. They'll be driving a little bit more. I have a little holiday weekend going this week. I have a holiday weekend going next week. So I'm going to be out on the road. And again, we'll see how it plays out going into the Memorial Day holiday.
Yeah, well, we're still locked down in Palm Beach County, even though we had a whopping 14 new cases yesterday out of a population of 1.5 million. I don't know what it's going to take for them to open the county, but they're not doing it yet. It seems like further south they're more inclined in Broward County to open. But you've seen states like Michigan and California, they're demonstrating now because there's no need, as the public is perceiving, for this lockdown to really continue much longer.
Yeah, to be honest, I don't really like to get too vocal about it. It is what it is, and it's not a great thing to have this virus, and it has affected a lot of people. But I just think that we went about it entirely the wrong way of this whole lockdown and everything. So I'll leave it at that. But, I'm not really happy the way they did it, but it created a lot of market opportunities. So, for that, I guess I'm grateful.
And it's eventually going to make gold and silver go higher, no doubt, as all this money hits the economy and goes into the banks and the traders, right? Yeah,
I mean, the amount of money that has been, created, really, it's absolutely amazing. So, when you see that, you have no choice but to think, hey, gold's the play, and the charts are telling you it is.
Yeah, no doubt. Well, we'll let you go. Happy Friday, and we'll be talking to you Monday. Just check out In the Money Stocks, and you get all the information there about what's available, about Nick's remarkable trading record. Nick, any questions you have for Nick or myself, email us, kl@kerrylutz.com. Nick, we'll talk to you Monday.
Thank you, Kerry. Have a great weekend.
This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.